Patience. It sounds simple, almost too simple, for something as powerful as building wealth. But if you look closely at the stories of the world's most successful long-term investors, you'll notice they all have one trait in common. Not genius. Not perfect timing. Not even exceptional research. Just patience. Today, we're diving into the psychology behind patience, why it's the hidden edge in index fund investing, and why most people lose money even when they invest in the right things. Because here's the truth. The market doesn't beat you. You beat you. By the end of this video, you'll understand exactly how to stop getting in your own way, and how to stay steady in a world where everyone is chasing the next big thing. Let's begin. Section 1. The Inner Battle. Why patience is hard. Let me ask you a question. Why is it so hard to do nothing? Why is it so difficult to simply buy, hold, and wait? You would think that doing nothing is the easiest thing in the world. But with investing, it is the hardest. Because in investing, nothing doesn't feel like nothing. It feels like missing out. It feels like being irresponsible. It feels like being left behind while others seem to be making quick money. And humans are not wired to sit still when danger or opportunity appears. We're wired to react. Let me share a story. In 2008, during the global financial crisis, average investors lost around 50% of their portfolio value. But that wasn't the real damage. The true destruction happened when terrified investors sold their positions, locking in their losses, only to watch the market recover and grow for over a decade. The ones who held, recovered. The ones who panicked, never did. So I ask you, when the market drops tomorrow, what will your instinct tell you to do? Will you follow your emotions or your strategy? Section 2. The market's game versus your game. The stock market has one job: to transfer money from the impatient to the patient. Think about it. Every time someone panic sells at a loss, someone patient is buying at a discount. Every time someone jumps into a hype asset, someone patient is selling at a profit. The market constantly whispers to you, move, react, do something. Because the more you trade, the more you lose. But index fund investing flips the entire game. It rewards stillness. It rewards discipline. It rewards long-term thinking. So here's another question. Are you playing the market's game or your own? Because your game has only 3 rules. Buy consistently. Hold through everything. Don't let emotions make decisions. Simple, but not easy. Section 3. The emotional cycle of every investor. Every investor, even professionals, goes through the same emotional pattern. Optimism, excitement, thrill, euphoria, anxiety, fear, panic, capitulation, selling at the bottom, anger, depression, hope, relief, optimism again. It's a loop. Your job is to avoid making financial decisions at the emotional peaks and valleys. In moments of euphoria, you want to buy more. In moments of panic, you want to sell everything. Patience is the ability to step outside the cycle and ask, what would my future self thank me for? Let that guide you, not your emotions. Section 4. The silent killer. Short-term thinking. Most investors say they're long-term investors. Until the market drops 3% in a week. Then suddenly they're checking charts, doubting their strategy, and clicking refresh like their portfolio is a live heart monitor. Here's the truth. Your brain feels market losses twice as painfully as it feels gains. It's called loss aversion. And it tricks you into thinking something is wrong, even when everything is fine. If you zoom in on the market, it looks chaotic. If you zoom out, it looks like a staircase going up. So let me ask, are you watching the market too closely? Because long-term investors look at decades, not days. Section 5. Historical proof. Patience always wins. If you invested in the S&P 500 at literally any point in history and held for 20 years, your chance of losing money is 0. Not low. Not rare. 0. Number 20-year period of U.S. stock market history has ever delivered a negative return. But people still lose money because they refuse to do the hardest part. Hold. Even Warren Buffett says, money transfers from the active to the patient. So I'll ask you again, are you patient enough to let time make you wealthy? Section 6. The 4 forces that destroy patience. 1. Social pressure. Everyone seems to be getting rich quickly. Crypto booms. Meme stocks. Overnight millionaires. You don't see the losers, only the highlights. 2. Market noise. Every headline tells you something different. Recession coming. New bull market begins. Tech stocks overvalued. Tech stocks undervalued. Who wouldn't panic? 3. Comparison. Your friend doubles his money in a week. You feel slow, behind. But compare yourself to your future self, not others. 4. Impulse. Humans prefer immediate rewards over larger future ones. But wealth is the opposite. It rewards those who delay gratification. Ask yourself, which of these forces affects you the most?
Why?
Section 7. How to build unbreakable patience. 1. Have a written strategy. Emotion can't fight a plan. Write down. What you invest in you invest in itho long you'll hold it what you'll do when the market crashes. 2. Automate everything. Auto-investing removes emotion. 3. Stop checking your portfolio. Once a month is plenty. Once a quarter is perfect. 4. Focus on net worth, not market movements. What direction is your wealth moving overall? 5. Learn to love boring. Boring investing grows. Exciting investing burns. 6. Track your behavior, not your returns. Ask, did I stick to the plan this month? 7. Zoom out. Look at 30-year charts regularly. They remind you of the truth. The market rewards time in the market, not timing the market. Which of these will you start practicing today? Section 8. The mindset of wealth. Patience isn't just a skill. It's an identity. You must see yourself as someone who doesn't panic doesn't chase hypedoesn't fear crashesdoesn't rush wealth. The market is a psychological game, and the person with the calmest mind wins. So tell me, what kind of investor do you want to be? The emotional, reactive one, or the patient, wealthy one? Your answer determines your financial future. If you've made it this far, you already have something most investors never develop: awareness. You now understand the emotional traps. You know the importance of patience. You know how real wealth is built. So starting today, choose discipline over emotion. Choose consistency over chaos. Choose time over timing. Because your future self is depending on you. And if you want more videos that help you master investing, not just the strategy, but the psychology, then stay locked in. Your financial freedom isn't just possible. It's waiting for you.